What are you measured on?
Share price.
That's it. That's your thing. Are you remunerated the same way?
Yeah, and when we were in the doldrums, I took, I qualify for cash bonuses. I took every cash bonus in shares.
Okay.
I never took any cash out of the company. I've never sold a share, ever.
Right.
And so I'm the largest independent shareholder of the company after 8.5 years.
Okay. Do you think there's any kind of credence in this thought that for investors, not institutional, I'm retail, high net worth family office, those are the guys we're talking to and listening to you today, okay? For them, do they invest into producers?
Absolutely.
You think there's money to be made?
Oh, absolutely. Yeah. Well, when you look at the metrics right now, there's good money that can be made. And again, it's all about sentiment. It's all about momentum. And, our share price performance in 16, 17, and most of 18 was stellar.
You going to get back there?
If we don't get taken out, we will be.
Well,
we will, and we've already initiated cost cutting. We reduced our workforce at Westwood by 300 people. 25% of workforce. Yeah. And we're initiating productivity improvement. We're going back to the future a bit. Right. To 2013-14 when we did all the cuts. And lessons learned. So, we need to get to a self-funding model.
Yeah, because
we can't rely on the market.
Of course.
Yeah.
To a large degree you can't, right? But you're sitting on a lot of cash. Have you got any debt in there?
We have $400 million due in 2025. But net cash, we're $400 million.
Right, okay.
So we're strong.
Yeah, for sure. That's not a bad ratio. So if I think about investors coming in, new investors coming in today, right. Not guys who've been there a while, today, do you think that you, or generically if you want to, producing companies are more focused on paying down debt rather than paying dividends? Or what are the options for companies like yourself to look after investors when times are good? You're sitting on a lot of cash. People like sentiments like, okay, well, can we have some of that?
Every day.
Right.
Why aren't you buying your shares back?
Yeah. So what's the answer?
The answer is you're right. We probably should be buying our shares back.
Right. Because
when you're at a 0.3 PNAV, the math says buy your shares back.
So you gonna?
We're gonna look hard at it.
Okay.
Yeah.
Okay.
No, it hasn't escaped us. But the problem with being a high cost producer, even though we've brought our costs down, is that you covet that cash. And so I don't want to be buying shares back and then having to go back to the market and use equity to raise cash again. It doesn't make much sense. No. But mathematically, when shareholders say you should be buying your shares back, they're absolutely right. There's no argument to that.
Why is the AISC so high? If I look at other large scale, which you are, low grade, bulk producers, we've seen some quite low numbers. Is it entirely down to the ore, the geography? What are the things that drive that, and why can't you drive it down more?
Well, we were on the path of driving it down significantly with Cote coming on, Saramacca and Roosevelt. We're a low grade. We run anywhere from 0.8 to 1 gram a ton. Wow. So, and we have historically been that, and our mines are old. So that's why Cote was such a big contributor. That's why Westwood, which had some challenges, was supposed to be a big contributor. And then our big discovery in Suriname will help tremendously at Roosevelt. So we were projected to drop from 1,050 down to 850-ish. So huge leverage. Now, I will tell you that yes, we are high cost, but a lot of the peers are catching up to us. So some of these bigger companies are running into the same kind of challenge. Hard rock, low grade, and I'm not saying that we're counting on that to happen, but it is happening. Right. We need to get our costs down. There's no question about it. We're gonna continue to do what we're doing. We're hoping that Cote, when we move that into the mix, $700 AISC.
Wow. Yeah. Okay, I hadn't appreciated that.
$700 AISC. Our net was 325,000 ounces. You throw it into a base at 850, and you're going to bring your average down. Roosevelt with Saramacca, you're bringing in 2 grams a ton soft rock into a mill that paid for itself 8 years ago. So your AISC comes down dramatically. We had 100,000 ounces of production from Saramacca into Roosevelt on a 300,000 ounce producer at AISC that's $750.
Right.
And so that was the strategy. Bodo and Senegal, same idea. Essakane with discoveries around Essakane and Burkina Faso. So there was a plan to bring it down dramatically, but we just got, we ran into a bit of a detour just around market sentiment. And again, we stumbled with Westwood. We had some seismicity challenges there. And Matt, it's like anything, whether it's a business relationship, a marriage, whatever, if somebody loses confidence, it costs you. And with the seismicity issue at Westwood that we had in the first quarter, we had some confidence issues in the market.
So, and I understand that it's a cyclical business, always has been. It's just we can't quite predict the cycles right now. It's a strange market for sure. So you've got to get this balance between running the business, all those things you've just talked about, and the thing you're measured on, which is share price appreciation. You must have a pretty good team around you. I think you mentioned some of them earlier, and got a dependence on them.
Yes.
So if I was to say, what would your message be to investors about what the next couple of years look like? And I also want to come back to, you mentioned a second ago there'd be people knocking on your door. I suspect I know the answer. Any M&A activity going on?
Well, we have always looked at opportunities and have never been able to, we've made a number of offers to companies to acquire them.
Right.
And it's never really worked out because the premium they were looking for was, beyond our reach. But we've never been able to find anything that really did much for us. And that's not to say they aren't out there, but when you hear Mark Bristow, who I have a huge amount of respect for, or Gary Goldberg, who I also have a huge amount of respect for, talk about selling assets. These are very smart guys. They're not going to sell their best assets. Sure. What are they going to sell you? They're going to sell you their seconds or third. So you see a lot of roadkill, and unless you're a miracle worker to take that dead carcass and rejuvenate it, you're really not going to want to buy that. So it sounds good, like, we have shareholders that say, keep your cash and save it for when Mark is going to sell.
You're good, but you're good for a while, okay? You've got a reserve, a huge reserve, right? But at some point,
there's no panic.
There's no panic, right? Okay, you're good for a while. Anyone knocking on your door?
We always have people knocking on our door.
Okay.
Yeah, there's always people looking, and as I say, how could they not? But we never comment on it. And it's a little bit like it's one of these things where people will be seemingly interested, but again, it's hard to get over all the barriers that seem to be in front of them.
Right.
And
like, what do you mean? Like what?
When Randgold and Barrick did their new no premium deal, they set a standard at the Denver Gold Show a year ago, and so. Okay, Randgold and Barrick did a no premium deal. Let's do a no premium deal.
Yeah.
Wow. I'm sorry, but
what does that look like?
That doesn't work. Right?
Yeah.
And the market punishes high premium deals. So it's not quite as easy as people might lead you to believe, right? You're trading at a 0.3, 0.4 PNAV. Hard for you to use your paper to buy an asset. It's very dilutive. You become very attractive to a high PNAV company that's saying, I don't want to pay you a premium because Mark didn't do that. Mark and John didn't do it. Well, they did it for different reasons, and it was a great deal that they did. and they were extremely clever the way they structured it. My hat's off to them. It really was a very clever deal. But that doesn't mean that sitting with IAMGOLD shareholders that we're going to accept a, no
subpar.
Yeah. Why
deal.
would you do that? Why would you do that?
Well, hopefully you won't.
No, but there are. I mean, again, if gold does start moving, and there is momentum.
The only sense of that, because if I talk to uranium guys, if I talk to copper guys, nickel guys, so everyone's got all commodities have got their problems, right?
Right.
It's woe is me. It's the price. It's not me. Have you got a sense of what the gold market's doing?
I think the gold market has more upside, and you, if you follow it, and I know you do, I've been watching it, especially even over the last couple of days. Gold dropped down to around 1270.
Yeah.
It seems to have a floor between 1250 and 1270, and today, last time I looked, it was up $10.
You don't think anyone's controlling that? You think that?
Well, there are lots of conspiracy theorists.
Well, that's what I'm getting at.
Who knows? It seems when it goes above 1300,
someone doesn't like it.
Some wingnut sells it in somewhere, and it drops. Somebody sells $1 billion worth of gold, and all the conspiracy theorists come out.
Yeah.
And I have no idea. This much I do know.
Okay.
That the only thing that matters is the dollar, U.S. dollar. It's the only thing that matters. I mean, you can have a warship show up in the Straits of Hormuz and with Iran, and nothing happens. But if the U.S. dollar drops, gold moves up. And if there's any sense that the U.S. economy is going to weaken and that the U.S. dollar is no longer the haven,
right,
gold will move up.
So if you're Canadian, right?
Yes.
Okay, so I can ask you this without fear of retribution. In the U.S., you got polarizing politics at the moment. You've got the Republicans who are very sure that Donald Trump is changing the nature of business.
Yes.
He's freeing people up to do good business, especially mining, right? And you got the Democrats who are fearful that some of his policies will lead to more debt. It's some extraordinary number at the moment, and his policies internationally as well. So, given that arena, that political arena, and what it looks like today, what's the call you're going to make on the American dollar and where it's going? You got one guy, because we're going great guns. Trump's doing things for our market, and you got Democrats with their view. What do you think is going to happen to the dollar?
So I spent 10 years in Texas, and I had the same style of management. I spent a lot of time in the field, and I remember sitting in Louisiana, and we had some issues, and this guy said, "Mr. Letwin, put the alligator on the table and let's talk about it." And I said, "Okay." Right. So here's the alligator on the table.
Right, that's a good one. Okay.
Here's the alligator on the table. $22 trillion in U.S. debt. Worldwide debt at $250 trillion. Every man, woman, and child on the planet, $88,000 US for the debt. Okay? No one seems to notice. No one seems to talk about it. You hear conspiracy theorists on the gold side, the gold bug, saying there's another $22 trillion that's not even on the books. Our Canadian government is spending like drunken sailors, highest debt in history, and the U.S. doesn't seem to care. I believe, in my heart of hearts, that someone will wake up one morning and say, there's too much debt. And with Trump using the U.S. dollar as a weapon, you see Russia, China de-dollarizing.
Yep, a lot of that.
Yes, and if you got the shit kicked out of you on a regular basis by Trump, which he likes to do, you will find a way to hit him between the eyes. And these countries, smaller than the U.S., are going to hit him back. And I worked a lot in China and Hong Kong. I worked for 5 Hong Kong billionaires. There's one thing you don't do. You do not cause them to lose face. Right. You do that, similar to the Japanese, they will pay you back. And he's going to have...
And they'll wait.
He's going to have his comeuppance. He's got some great business ideas, but this bold, brash, kick the shit out of my friend's attitude, which got him the most hated guy in New York State. They hate him. It's going to come back. Now, when does that happen? I don't know. But if the US dollar does start to turn, just like gold did, the gold price will move through $1,400 and $1,500, and it'll do it quickly.